Hey guys, and welcome to the Working Money Channel. Did you guys see this from Wanchain DYK that Wanchain is bringing XRP into the DeFi fold? They continue on by saying DYK that our XRP integration brings Turing-complete smart contracts to Ripple. DYK that brings XRP will enable to interact with other integrated chains like EOS, Ethereum, Bitcoin, and of course WAN. DYK, did you know that XRP hodlers will be able to use dApps like WanSwap, WanLend, FinNexus, and more? And did you know that Wanchain is the first decentralized blockchain interoperability solution to bring all of these use cases to XRP hodlers? Full Ripple integration launching at the end of the month. XRP, baby. And so here it is directly from Wanchain. This is from their Twitter account here. Just saw this late yesterday, so I thought I'd bring it up today. I also saw this guy's from Michael at Val5Links. Digital River CEO Adam Coyle explains how collaborative back-end processing is helping e-commerce merchants expand globally and process payments locally. So this from payments.com. The digital first economy has not been limited to the US or EU. It has taken hold internationally. So if merchants want to be where the growth is, they will have to master cross-border payments. And in this area, there's no shortage of complexity. Businesses outside of their domestic markets need partners that offer local payment processing, which speeds transactions for consumers and provides them greater flexibility in payments. It has been a key focus of late for global commerce solution provider Digital River, which understands partnerships effectiveness, having closed agreements with 43 technical and system integrator partners in the year 2020, an increase of 290% over 2019. On top of that, the company rolled out a drop-in payment feature in January that allows companies to quickly begin taking and processing localized payment methods around the world on their websites without customization. So these guys are in the payment business, and they have a relationship with a company that is RippleNet enabled. Digital River CEO Adam Coyle told Payments Karen Webster that this type of collaboration back-end processing model is lowering the barriers and the trepidation often associated with global expansion in local payment processing. The real evolution we're seeing is the opportunity to act like a local, not just on the consumer-facing skin of the transaction, but also in the back end through local fulfillment and local processing, he said. It's not just working with a local processor, but actually processing the transactions as a local merchant, which we know increased authorization rates, better sales, and better conversion. So, just to give you guys a little background here, Digital River, these guys did partner with SAP Commerce Cloud to drive global growth. Digital Rivers has joined a list of strategic partners that integrate with SAP Commercial Cloud to provide powerful ways for online merchants to engage with customers and grow their global revenue. So this partnership is relatively new as of January 4th, 2021. SAP Commerce Cloud customers can access the Digital River app on the SAP App Center. Together, SAP and Digital River have done a lot of work to offer merchants the ultimate solution for engaging international shoppers and growing global revenue. So in this article here, they did note that Digital Rivers did close a total of 43 technical and system integrator partners in 2020, of course expanding their network. So it looks as though this SAP partnership happened relatively recently, and I don't know if you guys knew this, but Ripple and SAP collaborate on international settlements using blockchain. Guys, this from 2 years ago, from October of 2018. So the RippleNet web just keeps getting larger and larger through these inadvertent partnerships. So I wanted to thank Michael at Val5Links for posting that. Here's another one, guys, from T-Hole Betic XRP here on Twitter. Nano runs on Ripple Customer Currency Cloud and uses cryptocurrency. So this article from Finextra, originally SH Payments selects Nano as their digital core banking platform. SH Payments, the tier 1 banking service provider, today announced that it has chosen Nano as its core digital banking provider. The Nano core banking platform, which was developed by software company Baltic Amber Solutions, is a full stack certified, secure yet open ecosystem, enabling seamless banking and payments across any chosen jurisdiction. Its core banking technology provides a full stack of digital banking services for fintech companies and allows businesses to utilize a vast array of payment options, from SWIFT, SEPA, payment cards, to cryptocurrency, foreign exchange, all in one platform. And so they are touting that they are open to many different platforms. But we also know Nano does run on Currency Cloud, which is a Ripple customer. So I wanted to thank T-Hole Betic for posting that. And this, guys, I don't know if you saw this from Stuart Alderati yesterday. Regulations are supposed to provide clarity and predictability. Regulation by enforcement does just the opposite. So he is retweeting out this Ripple Insights blog, and he thanks Professor Guseva for her keen insights. Now, this has to do with the UBRI on campus, Rutgers Law Law School looks to reform fintech regulation. And this article, written by researcher Yulia Guseva, she says down here, she acknowledges that the size of the U.S. cryptocurrency market is a contributing factor to the SEC's high rate of intervention. However, she believes the other key factor may be the use of the Howey test for determining whether a transaction should be classified as an investment contract and therefore registered as a security. The broad scope of the test has allowed the SEC to extend its authority over the past 70 years to a wide range of financial instruments, which today also include digital assets. I'm going to get back to this in a second, but I thought it was poignant to bring this up in the meantime. Mark Phillips tweets this out. What if the SEC Ripple lawsuit is to ensure no company can ever use an ICO in lieu of an IPO for fundraising? Now, hear this point out. This would preserve the SEC's regulatory authority, but stifle U.S. innovation, as early-stage startups can't afford to meet the SEC's IPO requirements. And he gives a shout out here to Jungle Inc. in this tweet. He continues by going on to say, thus far, only crypto-oriented fintechs have used ICOs as a fundraising tool. Short of a new law or legal precedent, there doesn't appear to be much to prevent non-fintech companies from issuing tokens/coins as a way to raise funds. This case can have a direct impact on all future coin/token offerings, including both fungible and non-fungible offers. Wonder what kind of nifty rules SEC would roll out for NFTs. In all seriousness, the real risk is that overly burdensome SEC requirements would drive innovation overseas, which would cede the US lead in the Internet of Value. Imagine if Google, Amazon, Facebook, or Netflix had to be based outside of the United States. Anders L. responds here, I had the same thought. It looks like it. It would certainly push U.S. innovation away from the crypto space, so I bet Switzerland, Singapore, Liechtenstein, and others will be happy. Jungle Inc. responding to this, I think that is essentially what worries the SEC about crypto. They want to protect their racket. They realize they have a racket going on here, and cryptocurrency companies have basically broken the mold of what the traditional fundraising model is. You create a cryptocurrency. There's obviously a market for cryptocurrencies. People are willing to buy cryptocurrencies, and thus, that's how you fund your project. The SEC obviously doesn't like the way this is going, and so they're trying to do whatever it takes to stop this from occurring. Let me just go down here. In a recent paper, Guseva emphasizes that the SEC seems to have departed from its previously clear policy of prosecuting crypto fraud and protecting investors. Kik, Telegram, and Ripple are important examples of this departure. I am worried about the dynamic inconsistencies in the recent SEC enforcement actions. Together with the broad reach of the Howey test, the inconsistencies in enforcement may exacerbate uncertainty and fail to provide market participants with a clear ex-ante understanding of the securities laws. Market actors need to understand what is expected of them and how to effectively comply with regulations. In fact, markets prefer predictability and certainty, while inconsistencies and unclear rules risk forcing U.S. companies to relocate their businesses to other countries and may profoundly affect the direction of financial innovation. Down here, they talk a little bit about cryptocurrency regulation in other countries other than the U.S. Let me continue down here, though. Another concern is that if the SEC can no longer provide clarity through strategic predictability of a transparent enforcement approach, and if the market finds substantial inconsistencies in the regulator's move and strategic commitments, the fabric of cooperation between the innovators and the regulator can be undermined. Guseva suggests that when this happens, even bona fide firms may be less inclined to comprehensively comply with U.S. securities law or seek cooperation from the SEC. So, an interesting article here, guys. Of course, I didn't read the full thing. I will link it down in the description if you want to read further. And very interesting remarks here from Mark Phillips and Jungle Inc. It sounds as though, to me, that the SEC wants to protect their racket, especially when you think about how they're treating these ICOs and how Professor Guseva mentions that the Kik, Telegram, and Ripple cases, respectively, are important examples of how the SEC has departed from their actions with regards to this. Guys, I also wanted to mention this tweet that I found from Arturo Pertilla. XRP is the digital token native to Ripple's blockchain, the XRP ledger, and can be freely transferred without the need for a central counterparty. Sounds logical, right? Sounds like what we've all been saying. Well, apparently this is actually the definition that the SEC gave to the XRP ledger. XRP is the digital token native to Ripple's blockchain, the XRP ledger, and can freely be transferred among blockchain users without the need for a central counterparty in transactions that appear synonymous on the XRP ledger. Basically, they are inadvertently acknowledging that the XRPL is decentralized. Has it then evolved into a non-security? He continues on by citing William Hinman's statement with regards to Bitcoin and Ethereum. And so when I look at Bitcoin today, I do not see a central third party whose efforts are a key determining factor in the enterprise. The network on which Bitcoin functions is operational and appears to have been decentralized for some time, perhaps from inception. Applying the disclosure regime of the federal securities laws to the offer and resale of Bitcoin would seem to add little value, and putting aside the fundraising that accompanied the creation of Ethereum, based on my understanding of the present state of Ether, the Ethereum network, and its decentralized structure, current offers, the sales of Ether are not securities transactions. And as with Bitcoin, applying the disclosure regime of the federal securities law to current transactions in Ether would seem to add little value. Over time, there may be other sufficiently decentralized networks and systems where regulating the token or coins that function on them as securities may not be required. And of course, there will continue to be systems that rely on central actors whose efforts are a key to the success of the enterprise. In those cases, application of the securities law protects the investors who purchase the tokens or coins. Basically outright stating Bitcoin and Ethereum not centralized, but in fact decentralized, and even in Ethereum's case saying that, other than, putting the fundraising aside, we can say that Ether is this because it is decentralized. Well, how is that any different than XRP? And it looks as though they've maybe even shot themselves in the foot by saying that XRP is indeed decentralized without the need for a central counterparty. This is from the SEC directly. And of course, John Deaton responding down here, great eye, Arturo Portilla. Of course, we know that this SEC lawsuit is about more than just deeming XRP a security or not a security. It's about how Brad and Chris treated XRP. There was a huge panic sell, though, for XRP, and now the price is hovering at about 47 cents, just over 47 cents. In the grand scheme of things, though, guys, this market is going to clear itself up. XRP price will skyrocket as soon as we get some sort of clarity. And guys, I also want to note that we are staying above critical support. So that is very, very important to note as well with regards to the chart structure, right? Because let's not forget, after the SEC lawsuit, XRP was trading right back down here in the 20s. And then sure enough, the pump group rose the price of XRP. It came plummeting back down. But now we are finding critical support in and around here above the 34.5, 35 cent level. This level was from back in March 2017. But if we look at current support, old resistance forms new support. We're staying above this level, guys. So this is positive news. XRP will have its day. Altcoin season's just around the corner, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Guys, I'm almost at 70,000. We need to hit 70,000 in order for the giveaway to take place. I'm giving away 2 Ledger Nanos, an S and an X, so please subscribe if you want to win. And like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.